Good morning. Thanks for joining me. I'm Jason Sen. I'm going to look through some Forex trade ideas for you for the start of this week. I'm in Malaysia this week. I'm in Kuala Lumpur. So if any of you are out there in Kuala Lumpur, you want to meet up, do contact me. I'm looking at the New Zealand dollar versus the Japanese yen. All of the charts I'm going to look at today are on the 1 hour charts because I'm struggling to find any longer term trends. The only trends I can find are very, very short term. And even they are hard to find because most of the markets are just moving sideways, as you know, if you've been following me for several weeks. But the New Zealand dollar versus Japanese yen certainly is in something of a bull trend recently. Even if I go back to November, you can loosely call this a bull trend, mostly sideways, as you can see through October and November. But we're breaking up. So I'm going to optimistically call this a bull trend. We broke above the previous high in February on the 9th after yet another consolidation phase. So we've got some support down there at 91.80, which was tested on the open. So we've got some support from 91.80 to 91.60 on the hourly chart. You can see down at 91.60, we've got some moving averages, a trend line on a 38.2% fib. So I would say that's a good support area. It's already been tested and it's already held. The euro versus the yen is in a more convincing short-term bull trend anyway, since the beginning of February. So over the last 2 weeks, a good run-up in the euro versus the Japanese yen. Although, again, when you look at the longer-term chart, going back to July of last year, we've really gone nowhere, just stuck in a sideways pattern. I was hoping this would develop into something of a head and shoulders, but it isn't doing that either. So at the moment, the only thing I can go on really is the bull trend that we've had for the last 2.5 months since the beginning of December. Euro versus the US dollar on the daily chart going back a year. Well, as I said last week, one big sideways channel. I mean, there's no mistaking that there is no bullish or bearish trend in the longer term for the euro versus the US dollar. But if I go to the 1 hour chart from the end of December, we do have a 1.5 month bear trend. Resistance around 108.00, 108.10 from the confluence of Fibonacci levels that you see on my 1 hour chart here. We've got some trend line resistance. I mean, this trend line goes back a week, so it's not really anything particularly important, but it's certainly working. It's kind of untradeable, really, because as I open this up, even the scalping opportunities are few and far between. Even if you'd had taken advantage of the biggest move last week and sold it at 107.80, the most profit you could have got was 50 pips as we dropped to 107.30. But you'd have had to be quick because we raced straight back up and we've held around that area ever since. But if we do get to 108.00, 108.10, I think that should be a good resistance level because of the confluence of Fibonacci resistance and the 500-hour moving average. Cable, the pound versus the US dollar, even on the short-term chart. This is a complete and utter waste of time as far as I can see. If you've got any trade ideas for cable, please do let me know. But this is just a complete random, erratic mess. So I haven't traded cable for quite a long time. The dollar versus the yen is in this V-shaped recovery, having dropped from middle of November to the end of December. We've now almost recovered the whole of that move in almost equal time. Well, I'm isolating the bull trend from the end of December to where we are now, which is approximately 6-7 weeks. I've got some support around the 149.35 area from this congestion area here. The trend line that you see, the 200-hour moving average, that is enough for me to consider looking at a long down there in a bull trend if we continue lower around the 148.40 area. Well, currently it's a good level because the 500-hour moving average is flattening out around there, and we've got that confluence of Fibonacci levels that you see there, the 23.6% fib level around 149.35. So that for me is the most important support level in the bull trend at the beginning of this week for the dollar versus the yen. The Australian dollar versus the US dollar in something of a bear trend since the end of December. And we've had a lot of sideways action throughout the whole of February. We broke down a little bit in early February. Now we're moving sideways. We have got some resistance around the 65.40, 65.50 area from the 23.6% fib and from the 500-hour moving average. That fib level does coincide really nicely with the swing low here in the middle of January and these little peaks here in early February. So I'm going to take the price action as confirmation that that is a good resistance level, and we'll see if the market turns lower from there. I can argue that the US dollar is also in a bull trend against the Canadian dollar since the end of December, as you can see, although here we've really only gone sideways for the last month. But if you're looking for a support level, well, we've got one around 134.60, 134.50, according to the trend line, at least. New Zealand dollar versus the US dollar was in something of a bear trend. But as you can see, for the last month, we've gone sideways. It's random. It's erratic. There's no pattern. There's no clear trend. I don't know what to do with it. We did break above the moving averages. We did break above the trend line. So in theory, that should be a buy signal when we should see the New Zealand dollar strengthen against the US dollar, but it's just not happening. We broke above it. We collapsed back. So I'm staying well away from it. I'll finish off with the Canadian dollar versus the Japanese yen. Now, the Japanese yen is in a bear trend against most pairs. So it's not surprising to see, even though the Canadian dollar isn't moving against the US dollar, it's increasing in value against the Japanese yen. Support around the 110.95, 90 area. Support if we got down here around the 110.20, 110.00 area, we've got trend lines, we've got moving averages, we've got Fibonacci levels, we've got previous swing highs. So that does look like a good support area for the Canadian dollar versus the Japanese yen. That's my quick roundup of what I'm looking at in the Forex markets at the beginning of the week. Make sure you're following me on my various social media channels and also on my free Telegram channel. I'll put the link in the description box below. I will be sending out some analysis and videos. So make sure you click the link and join the Telegram group if you're not already in there.